Assalamu Alaikum everyone, welcome back to another video. I hope you're having a wonderful day. In today's video, I'm going to look at a company that you guys have asked me to look at recently, and that company is this one here, Monster Beverage Corporation. But before we do that, can you please, if you are able to, join us on the Patreon account. That really helps the channel. So what I'm going to try to do today is look at this company's financials, give you an overview of what the company is all about. And then obviously, if you're really interested and you want to learn more about the company, go to their website, look at their 10K reports, make sure that you understand the business model and so on. As you know, this company sells all sort of energy drinks. I'm not really a big fan of energy drinks right now, but back in the days, when I was at university, one of their drinks was actually what got me through when I was doing my dissertation of my final year. So that was relentless. I think that was the one. It was absolutely crazy. 2 a.m. having a relentless and then carrying on doing my project. It was absolutely amazing. But yeah, so that's what the company does. So what I'm gonna do now is gonna give you the overview of the company, give you the financials, and then see if it's actually a buy or sell or whatever it is. Because some of you have asked me to look at this company. As you know, the company is in consumer staples. The name of the company is Monster Beverage Corporations, currently trading $57 per share. They have an EPS of $1.22, so they are a profitable business. Market cap of $60 billion, and it has a wide, narrow economic mode. Beta is quite low, so normally that is the case for consumer staples. And one of the things I really like about this company is the growth in the last few years. So I'm going to share that with you guys in a second. When it comes to PE, it seems very expensive. It's 47 right now. When it comes to forward PE, it's only 37. So it seems slightly cheaper. 5-year average was about 36. So based on the 5-year average, this seems expensive right now. And when you compare it with the sector, which is about 24 right now, and the S&P 500, which is about 26, this still seems very expensive. So what we want to do is we want to look at basically if justified somehow. Because remember, what basically we tend to do as investors is when you see a company like this, you think, okay, they grow in double digits, I'm willing to pay a bit more than the other companies. And that's why the PE goes up. That's why the higher multiples are sometimes a little bit justified. Price to free cash flow looking about 55. PEG ratio almost 2. So looking at PEG ratio seems a bit expensive, but maybe fairly valued. If it was below 1, it would be perfect, but obviously is above almost 2. Now in terms of free cash flow, we're looking at they've got $1 billion of free cash flow. Free cash flow margin is about 13%. Normally we're looking at about 5%, so that they're doing really good in terms of that. Free cash flow yield is 1.8. Normally we're looking at about 3, so that's below what we normally require. Profit margin, we're looking at about almost 20%. Operating margins of 25%. Return on equity of 18%. Total return in the last 10 years, this company has given about 18%. And then return on invested capital, we're looking at about 17%. Revenue, basically compound annual growth rate of 13%, and current ratio is basically above 1, way above 1. So they've got enough money to pay off any liabilities in the next 12 months. Now, this is the reason why people are actually paying higher multiples for this company. When you look at the growth estimate for next year, it's about 16%. After that, 25% for the next 5 years. And current price, obviously, we've already seen $57 per share. The fair value, according to Simply Wall Street, is actually about 52. So that's about 11% overvalued, according to them. So more or less same goes for Morningstar. They're saying it's about 21% premium. They expect the price to be about $48 per share. In terms of target price for tip rank is actually $61 by the end of the year. That's what they expect for the 12 months. And it's about 6% upside from where it is right now. More or less same thing goes for Seeking Alpha, and according to Seeking Alpha, the stock is a buy right now. So this is one of the reasons why people are actually paying higher multiples for this company, but it does seem a little bit expensive right now, especially when you look at the 5-year average basically being way lower than what it is right now, and comparing it with the sector and basically the S&P 500 indices. Okay, so in terms of that, it seems a little bit expensive. In terms of free cash flow, I'm not really a big fan. So it's a company that sells that type of product, it should be generating slightly higher, but the market cap is only 60 billion, so it should be about at least $2-3 billion in the bank. Okay, especially in this, if they're trying to grow the business. Remember, the companies grow business by obviously either borrowing bank from the bank, which is no go right now because the interest rates are very, very expensive. So the company should have enough cash to reinvest in the business. And if they're relying on getting money from the bank to grow their business, then that's going to be crazy. Basically, that's just going to ruin the business, okay? Unless they are generating enough free cash flow, okay, to then sustain that basically growth. Because remember, one of the things that companies do, they use the free cash flow to buy back their own shares, to grow the business, to pay dividends, to pay off any debt, and so on. So if it's only $1 billion here, okay, then that worries me a little bit. How are they going to grow this business? And the free cash flow margins are looking good, but free cash flow, in fact, it will be good to see the free cash flow per share of this company. It will be interesting to look at that. But yeah, so that is basically where it is in terms of that. In terms of Sharia compliant, though, I didn't even think this company was basically Sharia compliant. I don't know, for some reason I thought they might sell alcohol, but apparently they don't. Business activity screen is about 97%. So there's about 1 or 2% that's like, I don't know what they sell, but for some reason Zoya actually gives them 97.9. Let's call it about 98. Okay, in terms of interest bearing debt, there's basically fine with that. In terms of interest bearing securities, that's absolutely fine, and they have bought their shares back recently. Okay, so you can see here in 2016 they've increased it, then since then they have been buying a little bit here, okay, every single year. So they are basically 3 years they haven't actually bought anything back. They just kept it the way it was, and basically they expected, maybe they announced it recently, they are buying back their own shares. Now let's have a look at this. Okay, this is the total return, okay, for the S&P 500. This is the total return for Monster Beverage. Okay, you can see the orange line is the company, and the bottom line here, the blue one, it's actually SPY, or the S&P 500. And as you can see here, 449, let's call it 450% total return in the last 10 years in comparison to 220% of the S&P 500. So the returns was based for this company. If you had it since, let's call it since 2000 and basically 13, whatever it was, okay, you've actually made so much money with this company. Okay, and it is interesting. So it will be interesting to see if this is sustainable. So what we do is then we look at the earnings forecast, okay, estimation wise, and see if this is something. So this year in 2023, they're expecting the EPS, or the earnings per share, to grow about 28%. Then 16% the following year, 15%, 19%. Now, normally I like to look at top 3 because that's where most analysts are. There's only 2 people looking at here, this one, and there's only 1 person looking at as far as 2030. So we look at the first 3 here. So 20 people, 13. These are different analysts working for different banks, okay, and what they do is they make their own predictions, and then Seeking Alpha kind of gives an average of what they've basically predicted. So 38 is very, very, really good, like really, really good. 16%, basically double digits for the next at least 3 to 4 years, if not longer. Now let's have a look at the revenue estimators as well. That's about 13%. Again, double digit. If we just look at the first 3 again, you can see from 7 billion to 7.9 to 8.8 billion, then to 9.4, and then it carries on all the way to $12 billion. Like I said, we're only going to focus the first 3. So in terms of growth side of things, they're growing the business double digits. Okay, I don't think there is anything I'm worried about this company other than the free cash flow side of things, and how are they going to grow this? Is this organic growth? Are they going to reinvest some of that money they're making? It will be interesting. They don't pay any dividends, which is good. So this type of companies, you don't want them to pay dividends because they are still growing their business. Okay, but it's important to make sure that the free cash flow is high enough for this company to sustain that growth. And this is one of the things I wanted to see. There we go. Free cash flow per share growth rate, okay, forward is about 21, which is very, very high. So it is really, in terms of profitability, this company is really good. And if they can sustain this, okay, if they can sustain this will be absolutely amazing investment. But yeah, so that is my take on Monster Beverage. This is one of the companies that you guys have said you asked me to look at. If you haven't joined us yet, okay, please join us on the Patreon account, because it really helps the channel. Okay, we're getting closer to £81,000. Okay, we're getting there slowly, but we'll see what happens in the market today. Today's Friday, so I'm recording Friday morning. The FTSE 100 is just open, and the S&P 500, and obviously the US stocks will open later this morning. Okay, right, I'm gonna stop the video right there. Have a wonderful day. Assalamu Alaikum.